headlines this evening, the second round of 2G auctions kicks off with just one bidder, and that too for CDMA airwaves. Russian telecom firm Sistema bids in just 8 out of the 22 circles. India's trade gap narrows it marginally, a shade below $15 billion in February as exports gain ground for the second month in a row. The rupee recovers from a 3-day dip as trade data looks up. And the markets open the week on a quiet note. The Sensex ends the day almost flat, holding on to the 4.5% gains it made last week. Select mid-caps and real estate stocks see a bounce back. Metals and IT slump on profit booking. And the World Bank expects India to grow at 6% next fiscal, although it is unlikely to top the 5% this year. In his first visit to India after taking over as World Bank President, Jim Yongking says India has made an extraordinary effort to contribute to the global economy. Car sales plunged 26% in February, the steepest fall in 12 years, as high interest rates and slowdown fears dampen consumer sentiment. Industry body says no big pickup in sales is expected in the near term. Sun Pharma's Dilip Sanghvi says the new drug policy will help pharma companies work out their strategies better. Sanghvi tells ET Now that despite a handful of big bang acquisitions, it will be a while before Sun Pharma breaks into the big league. Good afternoon and welcome to Business Day. You're watching ET Now. I'm Faye D'Souza. Let's get straight to our top story this evening. Round 2 of the 2G spectrum auction ended today and appears to have been a complete no-show. Now, the lone bidder was Sistema, also choosing not to bid in all of the circles that it had showed interest in earlier. Now, the prices that are discovered today are important because they will determine what CDMA operators like Tata Tele and Reliance Communications will pay in the future. Let me bring in Gauri, who keeps us up to date on all of those telecom stories, for more details. Gauri, take us through what happened today and why this is important for the rest of the industry.
Today, of course, was the second round of the 2G auctions, ended in a complete no-show. Really, you just had Sistema, which participated only it was, of course, expected to participate in 10 circles, but bought spectrum only in 8 circles and will shut down operations in 3 circles, that is UP East, Maharashtra and Mumbai. So clearly, even the lone bidder who was showing interest in the auctions decided to stay away in several circles where it initially was wishing to participate. So clearly puts a very, very large and a very significant question mark on what really happens going forward as far as spectrum prices are concerned. GSM auction anyways didn't take place because the entire industry decided to stay away from it, both in 1800 and 900 megahertz auction, and even for CDMA just had one single player. Why is this important for the industry? 2 reasons. One is it probably strengthens the argument that spectrum prices are very, very high right now, and what industry has been clamoring for is an 80% cut in reserve prices as far as GSM is concerned, and a 50% cut in prices as far as CDMA is concerned. That argument gets strengthened, and probably the government will have to take a call on that. Second is that these prices, also the 8 circles in which spectrum has been bought by Sistema, is now the new benchmark prices, the new market prices for spectrum, and that of course will decide how one-time calculation and several other levies will be calculated by the government.
The quantum of spectrum that has been sold is 24 blocks out of 61 in 8 circles, and this accounts for 40% of the spectrum which was put on auction, and in value terms it's around 56% of the value of spectrum put for auction. In these 8 circles, the quantum of spectrum bid is 3 blocks, whereas the quantum of spectrum currently held is 2 blocks. So it is a slightly different pattern from the current holding, which is a lesser number of blocks in a larger number of circles. And what has been bid is a larger number of blocks in a limited number of circles.
The Finance Ministry has budgeted 40,000 odd crore from a fair bit of levies and charges and of course auctions. Do you think that's a target that's achievable?
The policy issues are already well in place. The manner of allotment and the pricing of spectrum is now well understood and well acknowledged. The process of setting the price, as I mentioned earlier, has been completed in a majority of the areas. And the conclusion of that process will happen over the next few months. There are currently no pending litigations or court directions standing in the way of any auction. But whatever directions have been already issued by the courts are certainly being kept in mind.
Well, staying with Telecom this week in our ongoing special series Hot Sectors with Punita Kumar Sinha, we get a 360-degree perspective on that telecom sector. Here are Akhil Gupta of Bharti Airtel with his views on the future of telecom in India.
Bidding is a function of a bidder finding whether the price is good or not. So there's nothing about deliberate or non-deliberate in that. I think people will take a call whether the reserve price which is there is worth bidding for or not.
Do you believe that it is fair for 2G prices to be pegged to 3G?
Well, quite clearly, I think that as has been mentioned by all the operators, the prices which have been reserved seem to be too high. Pegging 2G to a 3G kind of price is apparently not the right thing to do. But the good thing is there are auctions, and therefore the price would be discovered in an auction, whatever is the right price.
So you think people actually bid too high for 3G?
Yes, I think the answer to your question, whether the bids were too high, artificially high in 3G, is absolutely yes.
Akhil, how do you see the dispute between the companies and the government resolving? Is there more scope for litigation?
Well, I think there is no dispute in as much as, a price discovery mechanism by way of auction is concerned. But as far as the spectrum pricing is concerned, I think that is an established norm that there are going to be auctions and a discovered price is to be found.
Well, in our other big story this evening, India's trade gap narrowed marginally, a shade below $15 billion in February as exports gained on the ground for a second month in a row. The rupee, in the meantime, has recovered from a 3-day dip as trade data looks up. My colleague Sriram Iyer joins us with more details from New Delhi. He's live on location. Sriram, the finance minister, of course, stressed during the budget how important it is for exports to pick up. Take us through the numbers.
Indeed, he did say that, and that's exactly what we are seeing right now. He might be cheering right now. Exports have risen 2 months in a row in February, and that's a very encouraging sign. But here I should mention that it is a seasonal factor. Trade data during February or this part of the year is usually better due to seasonal factors. But it is nevertheless encouraging that we've seen exports rise 2 months in a row, and the deficit narrowed down to the lowest in the last 10 months. Last time we saw such a level of deficit was in April 2012. So but one of the big factors in this has been oil. Now because of oil products, import of oil products, our trade deficit has always widened. I mean, it has been widening for the last 7 months in a row, but this is the first time it's come down. But still, the import of oil products is still rising, and that's one of the concerns that the people, sources in the Commerce Ministry, have already raised in our meetings. Now, the immediate impact of this, surprise in trade data was seen in rupee, which bucked the trend. Last 3 days it was falling, today it gained. But the gains, many feel, will be short-lived because largely due to the hawkish commentary from RBI, which continues to focus on inflation and says that, and so it sort of dampens hopes of immediate policy easing. And the other point is the strength in the dollar, which is continuing to rise against all major currencies. So the gains in the rupee might be short-lived, but it is the rise in exports is good news, especially when you have a wide current account deficit as we do. Back to you. And before that, we should listen into Mr. S.R. Rao, the Commerce Secretary, who shared his views on the trade data today.
Exports have grown up by 4.26% for the month of February 13 as compared to month February 12. Imports have shown for the same month, that is February 13 vis-a-vis February 12, a rise of 2.6%. The good news is that the trade deficit, stress on trade deficit seems to be coming down with a resurgence in exports.
All right, Sriram, they're giving us the latest on the numbers, and the Trade Secretary telling us what that means. Moving on to the last street for this evening, the market snapped their 4-day winning streak to close in the red. That's coming up on your screen right now. The Nifty ended below the 5,950 mark. The Sensex shared about 74 points. Now, Realty was the biggest gainer, but auto is obviously being punished for those poor sales numbers for February. Let me bring in Aisha Faridi here with all the trading action of the day. Aisha.
Well, a day of consolidation really for the market. So pretty much we closed in where we left it off in Friday's session. It was a no-go session. There were the choppy, jagged edges, but it was a very narrow band that the Nifty was toiling in from the high to the low of the day. So 59.30 thereabouts and closing bell, marginally higher for the broader markets, but then again, just about flat on close. And it was the banks which were under pressure, with the Bank Nifty losing about almost 0.5%. On the flip side, there were gains coming in for L&T. You had Siemens, DLF, HDFC, Sun Pharma, Tata Power, GAIL, Asian Paints, HCL Technologies, as well as M&M, which were the top notchers. Like I said, relative outperformance coming in from the broader markets, with gains coming in for Rocket Pharma, Optus Circuits held out, TTML, IGL, Gen Irrigation, Finolex Cables, TV18, GMR Infra, Coromandel Fertilizers, as well as Hexaware were the gainers. Let's see whether or not the market gets another push tomorrow, and whether or not we're able to scale to that 59.50 mark and build on to that. We'll find out tomorrow morning at 8 a.m. on Trading Calls. So now it's back to you in the studio.
All right, Aisha, many thanks for those details. Now, what's ahead for Dalal Street, and how is that economy likely to impact the markets? Ruchir Sharma of Morgan Stanley sees positive momentum coming in, and he expects reform implementation to take place.
The fact that, the first step to a cure is to recognize the problem. So the complacency of a year ago, I think, has given way to some sense of recognition that we have a macroeconomic problem and something needs to be done. So therefore, not just the budget, but if you look at the series of steps which have been taken since last September, there is some at least positive momentum which is coming through, and that's the big difference from a year ago. India still looks reasonable here. I mean, as I said, that there is no other market in the world which is as correlated to other emerging markets as India. So I still feel that India will keep taking global cues and following global trends. I don't see that path really breaking away. The only way that path breaks out on the upside is if, of course, you get some very serious productivity enhancing reforms. I'm not holding my breath for that. I think that will happen over time. On the downside, that correlation can break if you end up getting some major macroeconomic trouble in the world, which leads to a period of risk aversion, because then the current account deficit funding becomes an issue.
Well, the World Bank expects India to grow at close to 6% over the next fiscal. Now, in his first visit to India after taking over as World Bank President, Jim Yong Kim met our Finance Minister today and discussed India's economy and its challenges. President Kim says India has made an extraordinary effort to contribute to the global economy, but growth in FY13, closer to 5%, has been disappointing.
India has made just extraordinary contributions to the global economy. India overall is a fantastic success story. The growth rate of 5% this year is one that has been somewhat disappointing, but a global slowdown, and we think that's also had an effect here. And as export markets start doing better, we think it will get back to higher levels of growth. And I was very impressed with all the things that the Honorable Minister and his team are doing to ensure that there is that growth in the future. We think it's going to be closer to 6% next year, and then we hope for even more increase in the future.
Passenger car sales growth in India plunged to a 12-year low in February as high fuel prices, interest rates and low consumer sentiments took a toll. Now, with just a month to go before the end of the fiscal, industry body SAM says it was certain that car sales growth would be in negative territory for FY13. Yatin Mota joins us with the details. Yatin, take us through the details right now with the breakup of each company, and what does this mean for those stocks?
Well, Faye, SAM generally consolidates the unlisted and the listed space car sales as well as the entire auto sales, and the data clearly reveals that the key players, Maruti as well as Hyundai, have been facing some problems as far as their petrol car segment is concerned, and that is the reason why we are seeing a big plunge in the car sales segment, especially in the passenger car segment, wherein the sales have plunged 26% on year-on-year basis, and also, they have been the biggest falling in terms of segmental performance in the last 12 years. Also, as you rightly mentioned, we have the high fuel cost, be it diesel, be it petrol, and also higher interest rates which are impacting the consumer sentiment, and that is the reason why we have seen the slowdown in that segment. Also, if we talk about the commercial vehicle segment, we have companies like Tata Motors and Ashok Leyland which have been posting losses there. The domestic commercial vehicle segment has been impacted because of the mining ban and also the low activity on the economic front, which has been impacting the commercial vehicle sales. Also, we have seen that because of the curbs that the government has done in terms of rural spending, and there are lesser discretionary spending with the rural people, and that is why two-wheeler sales have also plunged by nearly 3% on a year-on-year basis. Only we have the exports which have grown 13% on a year-on-year basis for the month of February. So clearly the auto segment entirely has been facing some bit of pressure. Barring the export side as well as the SUV side, most of the other segments have shown a slippage in terms of the year-on-year performance. So let's see really how does this data pans out going forward, because we also had Maruti last week which had cut the petrol car production for a day. So if this situation continues, more and more production cut as well as losses would mount as far as the listed space here in India is concerned.
All right, Yatin, thank you so much for joining us with those details. Yatin Mota there from our research desk giving us the numbers on the sales data for our auto sector. Moving on, Sun Pharma's Managing Director Dilip Sanghvi believes the company is well positioned for growth. Now, he also stresses the fact that it will need to do more to become a significant global player. And speaking about the new drug pricing policy, Sanghvi says any kind of clarity on pharma pricing will augur well for the sector. Listen in.
I think we are well positioned. We generally don't take a long-term projection. We should be, at the end of this year, be sharing our next year's business objective, but I see that all our businesses seem to be doing quite well.
How do you look at things going forward, the challenges? What is that you have the next roadmap for Sun Group?
I think when we look at global market and major players, we see that we are still a very small player and we have a long way to go before we can become a global company. I think the focus for us is to keep on improving our internal processes and operations so that we can continue to do well.
Looking at how things have panned out on the domestic front, how do you look at the new pharma policy and how are you looking at the pharma sector at the domestic front?
I think as business people and industrialists, I always look at clarity as an important criteria. So in a way, from a position where there was a lot of uncertainty, we have a policy which we know the implications of. So in a way, it's a great relief because then it allows us to plan for future.
Well, less than a week after market regulator SEBI set up its insider trading panel, the finance minister today told Parliament that strict action will be taken against insider trading. Chidambaram also said the Indian capital market is among the best regulated in the world and he expects the stock market to rise as the economy picks up.
For insider trading is a serious offense. We have to be cleverer than the perpetrator of the fraud. We are trying to be cleverer. I've impressed upon SEBI that its surveillance must improve and we will take strict action against anyone who indulges in insider trading. There should be one KYC across regulators. For the banking regulator, for the capital market regulator, for the insurance regulator and the pension regulator, there should be one set of KYC due diligence. But our capital market is among the best regulated. The Sensex and the Nifty has given a good return to those who are investing in the capital market. And I'm confident that with more investment taking place, with the economy picking up, with growth picking up, the Sensex and the Nifty, the two indicators, will continue to be on an upward trajectory and it will give a good return.
A confident finance minister there, but there seem to be slim attendance at Parliament today. HCL Technologies is under fire as freshers recruited by the company stage protests across campuses demanding a joining date from the company. Now, this is the second such protest in 2 weeks from freshers recruited in 2011, 2 years ago. Chandra Srikanth, who tracked that story and the protest outside the HCL campus in Bangalore, brings us a ground report.
As you can see, see behind me students from various colleges in and around Bangalore who haven't got their joining dates from HCL despite being recruited 2 years back, staging a protest here. It's not just the scene in Bangalore but outside other campuses of HCL such as Noida, Chennai and Hyderabad. Now the main concern here is despite them not receiving joining dates, HCL is going ahead and recruiting juniors in their batch and also doing a lot of off-campus placements. So their key question is why, when they are not getting joining dates, HCL is going all over the place with recruitment. What sort of visibility is there in terms of the joining date, and really when can they get some sort of indication from the company? This is coming at a time when IT companies are struggling with the overall macro environment, but HCL has been an outlier, performing very well amidst the IT companies. So clearly a lot of questions there for HCL Tech to answer.
All right, Chandra, thank you for that report. Now, in a sensational twist to the gruesome Delhi gang rape murder case, one of the accused, Ram Singh, allegedly committed suicide in a high-security cell at Tihar jail early this morning. The incident has raised questions over the police's ability to monitor under trials. Jail officials said the 33-year-old Ram Singh hanged himself from the grill of his jail cell, number 3, using his clothes. The news of his death has triggered demands from his lawyer and from his family for a CBI probe. All right, that's a wrap of Business Day. Thanks so much for watching. Stay with ET Now for more news and updates.